We had a very strong market through the first part of 2018, and then things started late in the third quarter or fourth quarter, we had a pretty significant sell-off. And then all of a sudden we had this aggressive turnaround in the first quarter, and that continued through the second quarter. And so if you look year to date, you see the S&P 500 is up something around 19%. The MSCI EAFE, which is the non-US developed world index, was up about 14%. And even the emerging markets index was up around 11, something in that neighborhood. While the S&P 500 and stock markets, as I just mentioned, in other parts of the world are rising, we're seeing rather contrary economic indicators. The first one of those is simply what we're seeing from the bond market and the yield curve.
A lot of people have been asking about the yield curve and the possible inversion of the yield curve, so I think it's worth taking a closer look at that. The very front end of the yield curve for like 3 months, 6 months, 9 months T-bills are indeed above the 10-year yield, which is sort of the back end that we think about. But the 2-year yield is still below the 10-year yield. So we don't have the classic 210 inversion. But the fact that the very front end of the curve is above the back end suggests that investors are a little worried about the future.
Federal Reserve officials have pivoted sharply from attempting to go against market sentiment, as they did at the end of 2018, to being more accommodative.
It has kind of caught people, I think, a little bit by surprise, and certainly, even the Federal Reserve, to consider that they raised interest rates by 25 basis points in December, and now here we are in July, and people are talking about the possibility of a 50 basis point cut. Clearly, there's been a sea change in the outlook.
And we anticipate Federal Reserve future policy decisions to be based on several factors, including the intensification of the trade conflict, as well as low inflation and the Fed's desire to decrease inversion pressures on the yield curve. We are very excited this quarter to bring you our 2019 Impact Report, which details the sustainability characteristics of both the Sustainable Bond Fund and the Sustainable Equity Fund. We encourage you to go to our website and download the report, where you can find detailed information on the fund's contribution to the Sustainable Development Goals, as well as detailed statistics on our characteristics related to diversity, inclusion, and energy efficiency.
Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate, so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting www.saturnasustainable.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information, which you should carefully consider before investing, about the Saturna Sustainable Funds in a free prospectus or summary prospectus, please visit www.saturnasustainable.com or call 1-800-728-8762.